We're delighted to welcome back to the podcast Robert Forrester, CEO of Vertu Motors. Hello, Robert, and good to have you back on.
Pleasure. Thank you very much for inviting me.
Yeah, good to have you on, Robert. Now, anyone who heard last weekend's podcast will know we talked about the media coverage of Vertu's AGM and a report by car dealer that Andy Goss nearly lost his re-election as chairman following what was described as a shareholder rebellion. Now, the following day, car dealer ran an update on the story, reporting the votes cast against Andy Goss and the dividend were actually the result of a clerical error. So, Robert, can you shed some light on what happened at the AGM?
Yeah, I mean, well, the first thing, Curtis, is he didn't nearly lose. He got over 80% of the vote. And last time I looked at elections, 51's enough, as we know, don't we? So he didn't nearly lose. But, I mean, we did sort of sit there when the proxy votes were read out. And proxy votes are people who vote in advance. And obviously, the major shareholders are big institutions and they voted him. And we sat there looking at each other thinking, well, this is a bizarre turn of events because one, Karen Anderson, our chief financial officer, got 99.9%, on her re-election. And then I think Andy got something like 82. And then we had 82% for approval of dividends. Well, to be honest with you, it's a bit like voting against a pay rise for shareholders, isn't it? Well, I would
Exactly,
vote against a dividend. So we thought, okay, well, that's fair enough. So we thought, well, we should identify, what the score was. And obviously it was reported very factually that, clearly there was 17%, 18% or something against. And as it happened, and I've been, a PLC director for 22 years, and I've never known this situation before. That actually one of our shareholders, that what they do, the shareholders, they instruct an agent to vote on their behalf, and the instruction was made, but a clerical error was made by the agent. You can't redo the vote. The vote was the vote, but clearly, from a board's perspective, and car dealer actually did put another article out clarifying the matter. It was a clerical error, and I've never known anything quite like that. But I suppose Mr. Goss is somewhat gratified by the fact that he didn't nearly lose the vote. But still, I think it was a quizzical moment, and one that we shouldn't worry about too much. And the shareholder in question is, very supportive of what we're doing, actually, and certainly had no intention of voting against the chairman's re-election or indeed the dividend.
Yeah, and as you say, the vote can't actually be recast, can it? That's it.
No, I clearly not. I mean, that's just not. Actually, it doesn't matter anyway. You got 82% is 82%. But it's an interesting thing that I've never come across before, and there we are, a new event, and made the AGM slightly more exciting.
I was going to be a bit say there was Trump or the Russians involved, but we better not go there.
No, it was a lot more banal than that. If I'm honest, it was a lot more banal. We did have a shareholder actually turn up, a very nice gentleman, asked one question, and we showed him round the place. And I got a very nice letter from him this morning saying how much he'd enjoyed himself. So there we are.
So obviously, cheers for clearing that up. I know we had a bit of a communication on the Twitter, because I think when you listen to the podcast, me and Curtis kind of didn't know what to say about the story, because it just didn't. It was kind of a question: where is this right, or was it right, kind of thing. So, but moving on from that and thinking about, obviously, you also shared your trading updates, which I know were till the end of February. And they came out in May, and obviously you shared those at the AGM, and I don't think we've really spoke about your trading updates, but what are your main points in terms of your trading updates up until
the trading update was really for the month of May, because when we did our announcement in May, we were going up to the end of April, so at the AGM we updated for the month of May, and actually other PLCs have also reported subsequently to us actually doing that trading update. So, I mean, what we're seeing is probably an expectation that new car supply will slowly come back. So I think we're seeing some visibility, or at least talk of it, which is gratifying. I think we're still seeing margins strong in new and used cars. I think we've seen, clearly we're now in months, aren't we, May, June, where, last year was the most riotous used car market in the history since the motor vehicle was invented. So we're clearly going to be behind that in terms of volume and probably margin. I think that's fully expected. The most powerful comparatives now. So I think we made a very strong start to the financial year, but you've got to be cautious a little bit, I think, about the outlook. Uncertainty over supply remains. Still think used cars will be tight, actually, from a supply standpoint. And that'll keep values declining, but hopefully moderately. But the whole people call it the cost of living crisis. I call it the cost of lockdown crisis, because that's what created it. Is going to hurt consumers, and I think we'll see slowdown in new car order take. I think we'll see used cars potentially also continuing to decline, certainly year on year. Whether it declines against 2019 is interesting or not. 2019 actually wasn't the best because of the Brexit shenanigans. So I think we are cautious in terms of the outlook. Happy with our expectations for the full year, but cost pressures and where the consumer is, I think, is going to be really fascinating over the next 6 to 12 months.
And do you think that's your main? I mean, obviously, you've built up an order bank of new cars that, as you say,
I've got a fantastic order bank. I mean, there's going to be a real funny period actually, whereby the SMMT registrations will be determined by how many cars come to the country.
Yes.
Not by demand. Demand's already built into the order bank. But I think we are starting to see softening of new car demand, as you'd expect in a more, with consumer confidence, really low, isn't it? And if you look at those indices. So we're going to see order banks eaten into. And we're going to see more normalization, I think, in terms of new cars, where we'll have to fight a bit harder, do more marketing, etc. And how all that balances out, we'll have to see. But I think the economic pressure will clearly have an impact.
And Robert, you mentioned about this gradual improvement in new car supplies. I just wonder if, what's your feeling at the moment in terms of when those supplies will start to improve, and whether or not it's brand specific? What do you actually see?
Well, it will be brand specific, but I think in generality, I think there are some green shoots where some manufacturers are now reporting full production. There's still challenges. Shipping, for example, from the Far East remains a major challenge, both in terms of cost and availability. I was with a manufacturer yesterday, and I remember pallets were an issue in the old days on trucks, weren't they? Always in the wrong place. I think we're there with shipping containers, always in the wrong blessed place, and probably ships. So I think there's still some challenges on supply. I don't think the Ukrainian situation helps us at all, and who knows where that's going directionally. So I think there's challenges, but I think the manufacturers are starting to see the end, or beginning of the end at least, in relation to semiconductors and things like that. I think they're getting more confident that they've got visibility of better times ahead. So I'm not saying that new cars are going to suddenly land in September even, but I think we can at least see that we may very well be through the worst, I think.
Yeah, and in terms of used car supply over the course of May, how did that look across the business?
Yeah, I mean, we're okay for used car supply, but if new cars are down, and new cars are down, aren't they, compared to, a 1.7 market's not a 2.6 market, is it?
Yeah.
There's no rental defleets to my knowledge. So, it's still tight. But with more subdued demand, that's okay, isn't it, really, if you think about it, because it means that we've got values that are holding up quite nicely.
And after sales, how's after sales performing? Because we've obviously, you're talking on terms of production and the challenges of, obviously, in terms of distribution and the shipping and things like this. There's reports that that's having an impact on the aftermarket because it's, you're waiting for parts and
Yeah, I mean,
aftermarket
that's
products to get across
absolutely
Europe into
true.
the UK. Is that? But at the
Well,
same time,
yeah,
you've got people keeping cars because they're waiting for the new cars or they can't afford a change of cars, so they're coming into the workshop for maintenance and servicing of their current vehicle.
yeah, I think it's a complicated situation presently. We have definitely got parts dislocation issues, to which I would ascribe pretty well zero to Brexit, but I would say that, wouldn't I? But we do have back orders for parts. But to be honest with you, if you went to Germany, they'd have back orders for parts. If you went to the United States, they'd have back orders for parts. And therefore, to my knowledge, Germany hasn't exited the European Union.
Yeah, I think it's. Sorry, I think it's probably. Is it that it's more about the production of the parts, the
Yeah,
availability of the
absolutely. No,
material,
it's
than
production and
distribution? Yeah,
production and logistics.
yeah,
So there's definite parts issues, patchy across manufacturers, but there's definitely. And my whip levels in parts whip
yeah.
have been the highest for. I can't ever remember it because you do a job, you've got 5/6 of the parts, but you can't finish it till you got the sixth one. So that's definitely an issue. I think we were obviously in a comparative period, aren't we, where we are 2 years out from the major lockdown, which reshaped the seasonality of service and MOT. That's potentially a factor currently. The decline of the 0 to 3 year vehicle park is marked, as we all know. Clearly impacts used cars, but actually also impacts warranty work. So the industry has seen a consistent decline in warranty work, which I think is part related. We are seeing a slight rise in recalls, which is helping a bit, but definitely warranties down. And obviously internal work in service is subdued if volumes are generally down. New car PDI. Used cars actually not too bad because as the average age of the used cars we retail goes out, then it's fairly obvious you have more reconditioning work to do.
Yeah.
And more parts actually required. So as the wear and tear increases. So I think it's pretty solid actually after sales. We've obviously all seen big increases in technicians' pay, which has a potential then to impact margin and labour gross profit percentages. But overall, we're happy with our service and particularly parts performance.
Now, last week, Robert, we mentioned how the trading update signed off with a line about Vertu continuing to evaluate and execute acquisition opportunities. Now, we know you can't share any specifics with us, but can you tell us how these opportunities are actually looking at the moment? Are there many dealer businesses actively looking for buyers, or are there any potential targets you're specifically interested in?
Yes to all the above, probably.
I thought you'd say that.
Yeah, there are a number of acquisitions that we're looking at and are making some progress on. They range from dealerships to digital businesses, actually in line with our strategy. I don't think the shareholders will be any major surprises. Some will come quicker than others, I think.
Yeah.
What's the situation? The industry's just had the best financial year ever. There's a lot of uncertainty in the minds of people around what happens in an agency environment. What are the manufacturers doing with regards to reshaping market areas and reducing the number of partners and reducing the number of outlet points? And time always plays a part, doesn't it?
Yeah.
Really. As I think you've probably seen from Twitter, I've been doing a lot of work with a behavioural scientist lately.
Yes.
And he said something really interesting, which is people make great life decisions when they have a 9 at the end of their age.
Yes.
Which has really struck me, actually, because we buy a lot of business from people who are 60 and always have done. And actually, I think Peter Vardy sold Reg Vardy when he was 60, I think, from memory. So, there's always a stream of acquisitions coming on. I think there's probably more acquisitions than certainly has been the last 2 or 3 years because timing, profitability, manufacturer actions. I think a lot of manufacturers are actively on the pitch.
Yeah.
And we are quite busy, not actually just with acquisitions, but franchising opportunities, all kinds of actions, as you know, akin to the Toyota work we've been doing in Scotland, which we discussed last time.
Yeah.
I was on the show. So yes, we are busy, and I've got quite a bit of time set aside to try and work on things.
There's a lot happening, isn't there? A lot happening.
Yes.
And just quickly, I know we were talking before the show about Mark. You've been doing amongst everything else that you've just talked about, but you've been doing a bit of a deep dive into the sort of the marketing and activities. Is there anything you want to sort of share? To bearing in mind there might be competitors listening as well, but in terms of some of the stuff that you've been looking at,
I tend not to worry about them. Really. We only have one competitor. I'm actually finished day one. I've done day one of 2 days. I do this sort of once every 4 months, where we get each element of our marketing team in to give an update on where they are, what the priorities are, what's going well, what's not going well. Key thoughts out of today. The marketing side regards to sports sponsorships and motorsport sponsorships, I think, is really aiding the business. I saw an analysis today. We've got more social media followers in pretty well every channel than all our competition, if you add everything up, with the exception actually of LinkedIn. There are 2 of our competitors who actually have more LinkedIn followers than us, which I thought was interesting. So social media reach is really crucial. One of our dealerships in the last 6 months, one dealership on Facebook has reached over 88,000 people in 6 months, which I think is exceptional.
It's a lot, isn't it? That's a big reach.
It's a big reach.
Yeah.
And there's a lot of work gone into that by the dealership and by the central team. And things like last weekend, we were at the Festival of Speed at Goodwood with a stand, Brandy, Bristol Street Motors, quite a big investment with our W Series colleagues and drivers, with the BTCC car and drivers. And there was a lot of social media activation. And up to 3 o'clock today, we've reached 1.5 million people through Goodwood in less than a week. So I think that element is going well, and it helps build brands, which we think is important. And then the other thing is we've done a lot of work on making sure that we're strong on electric vehicles on the web. And I think there's still a lot to do, but we've made a lot of progress with range and all this good stuff that was absent, which always made me
Where are your thoughts on EV? I know we spoke years ago, I think, when we were talking about obviously that transition towards EV and how quickly it would be, etc. I mean, are you whether it's to do with production issues and OEM focus, or whether it's the cost of living or the fuel pump prices, what as a business, where are you looking like now with EV and the shift to EV? You think
there is a shift. But it's not necessarily a consumer-led shift, is it? Because the government's dictated they've got to do it 100% by 2030. And Auto Trader have sort of got a graph of their expected, the glide path up to that, and I wouldn't necessarily disagree with it. And I think we're outperforming in terms of market share. I think we've got to be very mindful of which manufacturers we're with, because you've got to get to that number by 2030. However, and I don't like governments, to be honest with you. I certainly don't like governments that do a lot. It's tricky, isn't it? Because the Prime Minister standing up and says he's going net zero and we're going to do this by 2030 is all well and good, but is it reality? And we're in a situation where some really fascinating things are going to change. Can the British public afford electric vehicles? To what extent does mass production of electric vehicles lead to a reduction in the cost and therefore make them more affordable? Where are the affordable electric vehicles coming from? Which manufacturers will make affordable electric vehicles at a time when the British public are actually getting poorer at some rate of knots, to my mind? And what's that impact on after sales? I was at a talk this week, a fascinating talk, where the average age of an electric vehicle write-off in the UK currently is 0 years, because the cost of the batteries are a hell of a proportion of the overall car, and therefore if you've got a problem, you need to replace the battery, you're into real trouble. So insurance costs might go up. So accident rates should come down with ADAS and things like that. So I think we're in a period of massive change, because I don't really think we've ever seen a switch of this magnitude since we moved from horse and cart to the motor car.
Yeah.
And I think horse and cart were knocking about for quite a while.
Next to the motor cars.
So I wasn't around at the time, believe it or not. But
they're still
so
out,
I
depending
think,
where you live, Robert.
yeah, that's true enough. So I do think the industry has got quite a hard job to do, because we've been told by the government we've got to do it without the government really understanding what that meant. Reduction of the subsidy. Well, I mean, the government can reduce the subsidy, because actually they've just told us that it's illegal to sell anything else in 2030.
Yeah.
So, their view will be, well, you've got to do it, so get on with it.
And that's before you question that we're 5 years ahead of our European partner.
Oh, and actually there was a very interesting, I nearly tweeted it actually, but I thought somebody accused me of being anti-European. And I wouldn't want to be accused of being anti-European, but there was a very interesting piece of news yesterday, I think it was in Automotive News, where the Poles and the Czechs are going to get together, government-wise, to try and reverse the 2035 deadline on EVs in Europe.
Yeah.
And there's going to be a shed load of backlash here, because, there is a proposition that unless we can get affordable, cheap EVs through the system, then the average man on the street might struggle.
Yeah. Well, 80% of the cars in Portugal are diesel, because they have taxation incentives to drive diesel.
Yes.
So you've got a relatively poor country that you need to transition 80% from diesel into EV by 2035, which is...
And we're one of the richest countries in Europe, but we're getting poorer, with the 10% inflation rate. So I think there are a lot of challenges, and I don't want to be negative about it. We have some phenomenally very good electric vehicle new cars. We do. With good range, and they look good and they drive well. So there is customer demand for it. We've seen a massive 700% increase in website visits to the electric vehicle new car pages year on year. So there is increasing customer awareness of it, and indeed demand. But I just wonder whether we're in the easy bit, i.e. we're selling electric vehicles to those who can afford it. What happens when we get into harder territory of having to sell them to people who might not be able to afford it?
Yeah.
And then how the used car market goes, electric vehicles, I remain to see. How does it all work? What's the depreciation on electric vehicles? How does the battery go over time? Questions I don't know.
Yeah, I think a lot of the market are trying to still work that out, aren't they? But
well, the answer is that we won't know till it happens, will we?
Yeah. No,
we could certainly do with more electric vehicles in used car stock, because I think I've got about 150, and they, according to Auto Trader, they shift at twice as fast as petrol and diesel cars. So having them on board would be quite good news, wouldn't it? And certainly searches for electric vehicles and used car stocks going up through the roof.
Yeah,
we're definitely seeing that. So I don't think we should be overly negative. I just worry about governments and unforeseen consequences and competence, really. And then there's, what's the impact of all that in getting it all through the system?
There's maybe a bit of time behind it. There's still a few years yet for government change, isn't there, ahead of the 2030. But
well, they might in terms of the government changing, or the government changing its mind.
Both.
Definitely both.
Everyone you speak to, I mean, the debate in the last sort of weeks, 10 days, is about Europe trying to push back to 2030, 2040. It's been now confirmed that it's going to stay at 2035, but it does question why we're 5 years ahead in the UK.
Well, if there was a referendum in the United Kingdom on the subject, who'd win? Put it to the vote of the electorate, what would the result be?
Yeah.
And that's a fascinating question, isn't it, really?
Maybe one to start, Robert. Anyway.
The petition starts here, Robert. Well, look, Robert, many thanks for joining us on the podcast today and putting some context behind those media reports, and also for sharing your views on current trading, EVs, acquisitions, and lots more. It's great to have you back on the show, especially as we know you're a regular listener. So do come back again soon, and many thanks for joining us.
Yeah, thanks,
absolute
Robert.
Pleasure. Thank you for having me.
Thanks, Robert, as always.